Welcome back to the Money and Wealth Show. Our special guest this week is Adrian Mastracci, the president of KCM Wealth Management in Vancouver. And the conversation today focusing on retirement. Adrian, it's a subject that I personally have difficulty with. I'm just an active guy. I like to think I'm going to work until I drop. But of course, none of us will. Some of us will scale down our employment activities and work to a certain extent right up until the last possible minute. Others can't wait until that magic day at age 65 when they're gone and it's over. Regardless of your approach and your attitude towards retirement, we still have to plan for it one way or another. Tell us about the mathematics involved in planning for a retirement that allows a person a decent quality of life.
Let's take one example. Let's say we have a couple, age 50 and 48.
Okay.
They want to have an income of $50,000 in today's terms, starting 10 years from now. And let's assume that they go to age 90. At age 90, they will die. So somebody like that will have to have something along $800,000 plus the CPP, plus the OAS in about 10 years' time in order to facilitate that entire retirement income for the rest of their life. So the question really becomes then, how close am I to that $800,000 that I need in 10 years' time when I start my retirement? If I only have, let's say, $100,000, $200,000 today, and I need $800,000
in 10 years.
In 10 years,
that's a big chunk of change to come up with, isn't it?
That's a chunk of change. Yes,
yes,
it is.
So
if I've got $500,000 or $600,000, then it's not quite so hard. So you really have to look at it and say, what sort of income or portion of my income do I have to save from now until, let's say, 10 years from now, in order to make that happen? For some people, that may be too high an amount, so they have to scale something back. Either you move that yardstick forward a little bit by, say, 3, 4, 5 years, or you reduce the income, or you do both.
Now, what about investing some money in funds that will, upon retirement, pay you some form of annual dividend, some kind of fund that produces an annuity or something like that? So if you start investing now and you're going to retire in 12 years, 12 years from now, that's going to start producing X thousand dollars per year cash flow to your life.
Well, that's right. That's what you try to do. And in terms of the kinds of investments that you look at today, the question really becomes, what fits the kind of mix that is suitable for me? What am I comfortable with as far as a mix? How much should I have in stocks? How much should I have in fixed income in order for me to be comfortable with my investments, because I'm going to have to live with them for a number of years, and I don't want to do something that is not comfortable.
What are the most popular vehicles that people choose that will, in retirement, deliver cash quarterly or semi-annually? Well,
in retirement, you probably want two things. You want a portion of your investments to be in stocks that will give you some dividends and possibly some growth, because you probably still need some growth. On the other side of the coin, on the fixed income side, you might want to have normal bonds, you might want to have GICs, savings accounts, maybe annuities, stuff like that. But it all comes back to, what is it that I need as the investor in order for me to facilitate my retirement, in order for me to be comfortable with the amount of things that I'm doing for my retirement?
We've seen some pretty turbulent times in the last 18 to 24 months. A lot of people have frankly been scared onto the sidelines and parked their money and are very reluctant to get back into the game. To them, it's still too volatile. It's just too nasty a game to want to play in. And yet, they too are going to retire and are going to need addressing their their retirement issues. How do you convince those people to come off the sidelines and get back into the game?
Well, if you do the projections and you say to yourself, what is it that I need to do to get to where I want to be? Is it 5%? Is it 7? Is it 10? Or something like that? That will give them a ballpark. That will give them something to chew on that is really specific for them. I would say, though, they really have to look at their risk parameters. Not everybody can incur the risk that it takes to get those higher returns. And far be it for anybody like myself, let's say, to try and convince someone to take on that risk. because they're not going to like it. They're not going to be sleeping well with it. They just are not going to like it at all. So I think what you have to do is say, what is it that's comfortable for me?
So within any range of risk tolerance, and one assumes that as one grows a little older, one's tolerance for wild and crazy risky things diminishes, but within any range of risk tolerance, there are investment opportunities, right?
Yes, there are. And I think you just have to look at it, for example, on the stock side, you may go for dividends. That'll cushion the difficult times a little more. It won't stop all the losses from happening, but at least you'll be a little better off. So dividends go a long way. You may look at companies that are simply growth kind of companies. If you need growth in your portfolio, maybe you stay with a part of the portfolio in those sort of things. If you're the kind of person that says, I've got enough as it is already, I don't have to work that hard on my investments, then you have a blend between, let's say, dividends and the interest income that you get from the fixed income, and that usually goes a long way to getting you to where you want to be.
And back to where we started this segment off, the important thing is to sit down and literally do the math. Determine what level of income you would like to enjoy in your retirement and how far that is above the savings or cash flow level that you currently live with, and then address that difference in a positive way.
Well, that's right. You have to do that. You have to look at it and say, whereabouts am I? How close am I for me to get to where I want to be, and deal with that. And as long as you've got a blueprint, as long as you've got a game plan for dealing with that, don't worry about the actual investments. Look at the numbers, look at the math, and always keep telling yourself, how far off course am I? And if I am off course, what do I have to do to get back onto the course?
All right, our special guest this week from KCM Wealth Management in Vancouver, Portfolio Manager Adrian Mastracci. We'll be right back.
Good afternoon. My name is Larry Ray. I'm the Chairman and CEO of Molycorp Gold Corp. As the name states, we do have a deposit we're developing in British Columbia, which is a pure molybdenum deposit. But our focus these days is on magnesium in Nevada. Through serendipity, we discovered a large deposit of magnesium running about 10% with a high purity and consists of about 256 million tonnes at this time, 52 billion pounds. Our main emphasis is to move this project forward by beginning a drill program later this year in which we can increase the integrity of the resources into the indicated and inferred, as well as increase the resource itself. For further information, please visit our website at molycorp.com or phone us at 604-531-9639.